Hi, this is Stephen here from Share Navigator, and I'm going to give you a quick update on the S&P 500. We're also going to have a look at the Nasdaq today, guys, because it's very important, and we're going to look at some of the big tech stocks as well, because you're going to see that they're all really at key support areas, and I would expect a bit of a bounce in the market today to the upside. And if we don't get that bounce, I think the market could get really ugly again. So let me explain what I'm talking about here. So here's yesterday's move, down 2.7% in the S&P 500. And we've talked about this for a while. We just felt the market was overcooked. And you can see this is a nice correction here from the high, but it's still in a serious uptrend if you like. It's broken down below its 10, 20-day moving average, and it's approaching that 50-day moving average, that purple line, which will act as support at about 330. And below that, we're all the way down to our 200-day moving average at about 3100. And you can see our momentum indicators. We got our sell signal and stochastics nearly approaching now that kind of oversold region, which would give you maybe a little bit of hope that there might be a bounce in the index in the short term at least. Um, Looking at our Fibonacci's very quickly before we move on. So we just take this as the low up to the extreme high. You can see that that 38 percentile is in and around that 200-day moving average as well. So that's a key target to the downside if we start breaking below these support areas. So there's key support areas here at the minute. We're approaching one, which is our 50-day moving average. Then I suppose this little area here at about 3250 and then 3200, they're kind of shorter term ones. But if we break that 50-day moving average, I think we've a bit further to fall in a very short period of time. Um, let's have a look at the Nasdaq then as well and just see what that's saying to us. And that's really important to have a look at. Here's the Nasdaq futures. You can see they're up today, so the market is setting up for a bit of a bounce. But if you look at the sell-off in the Nasdaq, right down here to that 50-day moving average, but it's held. It's actually finished above it in the futures, even though it dipped below it. And you can see here as well, that's a key support area. So if you think about it, Nasdaq has hit key support right now at the moment. It's right at its 50-day moving average as well. So this area is critical to hold. If we don't hold on the Nasdaq here, we could see a further 10% drop in tech shares. So this is a key area for technology stocks as well. Looking at the Fibonacci's on the Nasdaq, we'll just chart this move. Again, that's kind of coinciding here with potentially another 10% drop as well before we hit like a traditional support area. So this is really a critical time for the stock market at the moment. We've hit support really on the S&P 500. We've hit support now on the Nasdaq. And I think if the Nasdaq starts to fall from here, guys, it's going to bring that S&P 500 down with it. Let's look at some of the key stocks that are part of the Nasdaq and some of the reasons why the markets went to ridiculous multiples. So you're looking at Apple here. You can see the fall from grace here. The big melt up in the shares since it split, it went up 30%, which was absolutely ridiculous. We kind of have a reason why, and I'll talk to you about that now in a moment. But you can see again with Apple here, we're after selling off substantially, and we've still a small bit to go to this 50-day moving average before we hit support. So we could drop there another $6 in Apple, another 5% in Apple before we actually get to a support area. Looking at Google, another example, you can see we're at a 50-day moving average. If we look at Amazon, 50-day moving average is support. So you can see how critical the area is at the moment, guys. And I could keep going on with this. There's loads of examples of technology stocks that are right at their 50-day. Look at Tesla here, even with all the sell-off. Key support areas have been reached on these technology stocks. And remember, these are the stocks that dragged up the two indexes over the last 3 to 6 months. It wasn't really a broad-based rally. Remember that technology led the way. So it stands to reason that if technology does sell off, it's going to drag that index down with it. And you can see here that's why today and tomorrow and these support areas are critical for the health of the S&P 500 going forward. If these areas, watch these and have them on your watch list. Not necessarily to buy the stocks, but just if these start breaking down below those moving averages, there could be further downside to go, and it's going to take down the S&P 500 with it. So it's really important to keep an eye on that as well. Just to explain a little bit about what happened here, you may have read articles last week about an investment bank called SoftBank in Japan. And what they were doing is buying lots of calls. They invested $9.3 billion in call options in the likes of Tesla, Apple, and other technology stocks. And the call option volume for these stocks tripled in the month of August. And what that forced the investment banks that were writing the call options to do was to actually buy the stock in order to cover their positions. So if you think about it, it became a self-fulfilling prophecy. As more and more calls got bought, the investment bank had to go and buy more and more shares, which basically caused the share prices to rise. But now that the cat is out of the bag and the markets have corrected a little bit, those investment banks no longer needed those stocks to be able to cover their positions, so they started to sell, and this is what causes the sell-off. Now you add in all of our retail investors who may be getting spooked, who don't see the long-term value in what they've bought. They're probably adding to the selling pressure as well. So this is a number of reasons why the likes of these stocks melted up in the month of August after the split. It didn't make any sense from a fundamental perspective. But now we've hit a key support area, and I think you're going to see a bounce in a lot of these stocks today. You can already see Tesla now in the pre-market is up 6%. You're going to see that for a lot of those tech stocks. Watch it though carefully, guys, because if this does not hold, if this is a false hold and it breaks down again, I think the S&P 500 is going to be in trouble again, and eventually we could go as low as 3,000 on that, which would be 10% lower from where it's at. And I think at those prices, then you could look at buying the market. Okay, this is Stephen here with a technical update on the S&P 500 and the Nasdaq and some of those big tech stocks. Thanks and bye for now.